I'm Dr. Jonathan Surton, CEO and President of Axiom Space, and you're watching Taking Stock.
Time to rock and roll in another history-setting day. This time a fresh round of all-time highs for the S&P, the NASDAQ, and the small caps. Who better to kick off another history-setting broadcast than with the great Einstein of Wall Street, the one and only Peter Tuchman down here on the floor. The best month, Peter Tuchman. We're wrapping up April 2026. 5 years.
Spectacular.
What happened here the last few weeks?
You know what? Look, you could think back to that year. Think about this. By March of that year, we had record lows, right? From February 12th until the bottom we hit on March 23rd was that devastating period of time where the world was changed forever. But by year's end, we were up 20%. This is the same kind of market we're experiencing now, okay? Because there is just this enthusiasm that's unbelievable. Everybody, every tranche of buyers, institutional, retail, you know, individuals, funds, everybody's buying. Nobody wants to be left behind at this point. Record highs at this, look at the chart. It's the end of the month. We had $3.5 billion notional dollars to buy all afternoon. So they're buying everything that's not locked down.
Well, amazingly, they're not really buying tech. Tech was actually the underperformer of the day, so it's not your top generals doing the lifting. It's industrials, healthcare, and utilities.
But we've
some
had
rotation.
3 or 4 days coming into this where tech was happy.
Absolutely.
This is true.
So a bit of rotation, some breadth.
A little
I'm sure
rotation
you're seeing on the tape as well.
Closing out an amazing month.
Thank you for being on my show this morning. Thank you for being on this show here to kick the off the broadcast.
Happy trading, everybody.
Time for the closing bell. The team from Raise Summit, both doing the honors, will also join us here on the broadcast. But first, time for the bell. That's it. The vibes are always high when we get all-time. The vibes are high every day down here, whether the market goes up, the market goes down, but especially when you get all-time highs, this is what it's all about. Thanks there to Peter Tuchman for kicking us off. Your final tale of the tape on this Thursday, April 30th, the S&P 500, wow, up a full percent, 1.02. It looks like it will finish in. The Dow 30 up 1.6, the New York Stock Exchange Composite Index. There's chaos behind me. I love it. Up 1.7. The small caps up 2.2. Speaking of the small caps, let's bring in someone who has very strong conviction on that space. Friend of ours here at the New York Stock Exchange, Eddie Gabor, joins us via Zoom. Eddie is the co-founder and CEO of Key Advisors Wealth Management. Eddie, let's start there. I know you're bullish. You got conviction on the semis, AMD and others having a strong day today. But, man, you got to love what you're seeing out of the Russell 2000.
Absolutely. They are really outperforming on a relative basis, and I think the setup continues to be fantastic for small caps. You know, they've been beaten up for a while, you know, really since the end of 2021. It wasn't until this year where they really started to break out. And I think one of the biggest components is the bar was set really low for small caps heading into this year in regards to earnings. And look, what this is telling us is that the underpinnings of this economy are much stronger than many people had priced in, which is why you're seeing these economically sensitive areas outperform the broader market, and we think that's going to continue. So small caps should continue to be a big winner in 2026.
Yeah, I know you're tracking NVIDIA. You mentioned earnings. You can't go very far this week, Eddie, without talking about the big tech names. A big tranche of them yesterday. We got Apple's figures crossing the wires here after the bell today, really coming any moment now. For Apple, we're looking for iPhone growth, how the company handles the CEO transition. What other big tech storylines are you following right now?
You know, the big story is the CapEx spending. You know, just yesterday, all these Mag 7 companies that announced earnings, there's over $700 billion of CapEx spending. It's just a massive cycle that we're going to be going through here, and this is why we're so bullish on certain areas. Now, you have to be in the right sectors, and stock selection is going to be critical, but I think we're back. This sell-off we had in tech earlier in the year was exactly what we needed to recalibrate and have them set new highs. And you mentioned NVIDIA earlier. We just bought more NVIDIA today. We think that's something we want to own going into earnings because I think they finally are going to break out and blow through new highs. So it's great to be leaning towards tech again, and I think they're going to continue to be a big winner.
Eddie, I want to get your thoughts on Powell yesterday. Jerome Powell, probably the biggest headline. We knew what the interest rate decision would be. He's basically saying, I'm not going anywhere. I'm going to keep my voting seat on the FOMC as a Fed governor, at least for now. Your take on that and general expectations for Kevin Warsh?
So I was really surprised that Powell wants to stay at the Fed. So I was really scratching my head on that one. I'm not sure why he would want to, but to me, it's a distraction. But you know, he has the ability to do that. So I think it's the first time in over 70 plus years that the head of the Fed is staying on as a voting member. So we'll see how that goes. In regards to Warsh, I don't think he's going to be as hawkish as the market is concerned with. You know, he's definitely talked about getting the balance sheet down, but I think he understands markets. He was at the Fed during the financial crisis, so he understands that if you're going to reduce liquidity, you have to do it in a methodical way that's not going to break the bond market. So I'm very comfortable and confident that he's going to do a good job. And at the end of the day, if he does shrink the balance sheet, that's not necessarily a bad thing in trying to get us back to a normalized situation with balance sheet. So I think we get one rate cut this year and then we're done. I don't think we need any additional rate cuts because I think the economy is strong enough. And I certainly don't think we're going to get a rate hike. And I know that's something that people seem to be concerned with Warsh coming in. I see a very, very low probability of that. That's not even anything we're concerned with at this juncture.
Yeah, despite the fact we got that core PCE print just this morning, Eddie, 3.2%. We will see how incoming Chairman Kevin Warsh and the other FOMC members handle those prints. I got about 30 seconds left. Any other big macro forces or catalysts you're paying attention to?
You know, I think the story now is we're looking through oil prices and we're focusing on economic growth and the earnings story. It's all about CapEx. And I think NVIDIA is going to be the next major catalyst for this market to take the next leg up because it's such a highly weighted stock in all the indices. So I think they're going to really surprise again to the upside on earnings and take this market to another leg higher.
Eddie Gabor, longtime friend of ours, co-founder and CEO of Key Advisors Wealth Management. My man, thanks for being here. Nice to have you.
Thanks for having me.
All right, you got it, my man. All right, now we bring you the latest analyst calls that move the tape today here on Wall Street. We'll start with some tech and Palantir. Eddie and I just talking about it. Oppenheimer reiterating Palantir has outperformed just a few days before they report earnings on Monday. JP Morgan, meanwhile, downgrading Meta to neutral due to rising competition. They say the full stack AI competition is intensifying. Meta shares down about 7% after reporting yesterday. Finally, B of A reiterating NVIDIA as a buy, $300 price target. NVIDIA set to report results on May 20th. Jeff, let's take a look at one New York Stock Exchange notable, and is it ever on the day, up almost 10%. This is the top dog in the Dow. It is CAT. That's the ticker symbol anyway. Caterpillar here, knocking the cover off the ball, forecasting higher annual revenue. The reason for the big pop in the Dow today is because Caterpillar is the second most weighted name in the Dow, now up 6 days in a row. The strongest name in the Dow year to date and over the last 52 weeks, trailing only NVIDIA for the last 5-year performance. Though to be fair, NVIDIA hasn't even been in the Dow for the last 5 years. Caterpillar, very strong tape. Earlier this morning, the New York Stock Exchange's own Kristen Scholler caught up with NASA Administrator Jared Isaacman. What a get, what a guest. He was here to ring the opening bell. Take a look.
Welcome back to NYSE Live. Everyone, we are down here on the trading floor of the New York Stock Exchange, and earlier this hour, the 15th NASA Administrator, Jared Isaacman, rang the opening bell to kick off the trading session. Isaacman joins me now here on the floor with more. Jared, congratulations and welcome.
Oh, it's absolutely great to be here.
Yeah, it's great to have you here. Of course, Artemis 2, a massive success, and I saw the core of Artemis 3 already arriving at the Kennedy Space Center. What is next?
Well, that's exactly right. We are just getting started. I mean, Artemis 2, a historic mission. We send astronauts farther into space than ever before, around the moon, back here to Earth. And I'll tell you, as they were going around the far side of the moon, we were already getting ready for Artemis 3. The hardware is being delivered. We're stacking. We're launching in 2027. That'll be Artemis 3. 2028, that's when we put American astronauts back on the surface of the moon.
How are we going to get there to 2028 when those humans get on the moon?
Well, That's what we're doing. We're drawing on the playbook that worked for us July 20th, 1969, when we put Neil and Buzz on the moon. We launched Artemis 2. That was the opening act. Artemis 3 in 27, we're going to test the Orion spacecraft with the landers, but we're going to do it in Earth orbit. Want to make sure they work well when we're close to home. And then 2028, that's when we send the landers to the surface of the moon. And we are not just going back for the flags and footprints this time. We're going back to say, President Trump's national space policy said, pick up where Apollo 17 left off, but build the moon base, master the skills for where we will inevitably go next.
How are you working with corporate America to get there?
Well, it's a great question. I mean, and you see a lot of the manufacturers, the vendors that are contributing to America's space program right here across all the screens. Some of the names that were there during the 1960s, and then new names. We put a heck of a demand signal out to industry, lots of landers, lots of rovers, to build the base. Again, that enduring presence. We'll master the skills there for when we inevitably go to Mars. Industry's playing a huge part.
And it will be a new crew for the further Artemis missions, is that correct?
Oh, that's right. I mean, we have an unbelievable astronaut corps at NASA. They're energized right now coming off of Artemis 2 because they can see it. They know we're this close for their opportunities to pick up the baton that Artemis 2 has handed off, get back to the surface of the moon. So we got a great rotation of astronauts that are coming up for the missions ahead.
Yeah. Now, the tagline for the Artemis program is Moon to Mars. When are we going to see astronauts go to Mars?
Well, I'll tell you, that is why we are going back to the moon. That's why we're building the moon base. So we are going to interact on the south pole of the moon with the water ice, master the skills, manufacturing propellant, because we're going to need to do that when we go to Mars. We should figure that out on the moon, which is a heck of a lot closer than a 9-month journey to Mars. But we are talking like the next 10 years, next 15 years, we are going to have the skills, we'll have the technical capabilities to be able to send astronauts to Mars, be able to bring them back home safely to tell us about it.
Talk to me about the economic benefits and what, of course, NASA is looking at from a scientific perspective that justify these missions.
Well, of course. I mean, there's a lot of good reasons to do it. We are fulfilling a promise to the American people. We are inspiring the next generation to grow up and take us even further. But there is absolutely a lot of scientific potential. I mean, we are going to be landing landers and rovers on the moon on a near monthly cadence starting in 2027. We are going to pack them with scientific instruments. I mean, all the mass and volume affords from universities around the country. We could put radio telescopes on the far side of the moon to help us understand our solar system better. We're launching missions like Nancy Grace Roman Space Telescope to unlock the secrets of the universe. Lots going on, but there's also economic benefit. There could very well be a lunar economy someday. We could be 3D printing satellites with the lunar regolith. We could be mining helium-3, and then, of course, it's a technological proving ground for the skills needed to go to Mars.
The last time we saw you at the stock exchange was actually virtually. You just happened to be in space, Jared, for the Inspiration 4 mission that you commanded, launched from the Kennedy Space Center. How did that experience prepare you for your role as NASA administrator?
Well, I'll tell you, certainly being in space was a privilege of a lifetime, and it does give you that very unique perspective of our planet, but even more so the experience that leads up to going to space, to be part of the mission design, the development of hardware, to see the hard work, the contributions from literally the army of people that it takes to send humans in that incredibly harsh environment of space and bring them home safely. It was always the journey leading up to the mission that I loved the most, to be honest, and now I get to be part of that alongside the best and brightest from across the nation at NASA.
You know, my final question is to you about the astronauts, because they're going to be joining us here at the New York Stock Exchange soon for a bell moment. I read that their health checks and tests are completed. Would you say it was a success for them? How are they doing?
Oh, the astronauts are fantastic. I was with them yesterday with President Trump in the Oval Office. They're here with us in New York City now. They're continuing their mission. They're spreading all the good, all that they've learned, all of their experiences from being on that space mission and sharing it with the world. I mean, health there is fantastic, but I'd say like they are energized because they were right there. They saw where we're going. They're going to pass on all that good information to the next crew that's inevitably going to get us back to the surface of the moon.
Jared Isaacman, no stranger here to the New York Stock Exchange, bringing the energy to the trading floor, of course, after the successful Artemis 2 mission. We look forward to Artemis 3 and beyond. Jared, thanks again.
Thank you.
Welcome back to the show. Salman Tesfaye joins us now down here live on the trading floor. He is the Chief Business Officer at Aptos Labs. It's really nice to see you. Thanks for joining us.
Good to be here.
So talk to me about some of the ways that Aptos is leading the charge on the tokenization of RWA's real-world assets. What an important time. to be working in that space.
It really is. So right now we have about 1 billion of RWAs currently on Aptos. It's really diversified. Money market funds, private credit. We're really looking to get greater diversification on chain. And so it's really we're at the tip of the iceberg when it comes to just more assets being put on chain on a daily basis.
I want to ask you about Decibel. Correct me if I'm wrong. That's the name of your
That is-
fully on-chain exchange.
That's right.
What are the important details the average person should know, and in what ways is it most different from maybe a more traditional exchange?
So no layer one that I'm aware of actually has incubated an exchange. So this is a fully decentralized exchange, but leveraging the characteristics of Aptos, we actually are able to provide centralized exchange level performance while actually facilitating distribution of very just diversified assets on chain.
AI data center costs. We're talking about it all week with the big tech earnings. I mean, these are enormous sums of money. Are there ways that blockchain can actually make those costs for AI data center build-outs a bit cheaper?
Yeah, so we have what we call Shelby, which is a co-build with Jump Crypto, and it allows for fast, scalable infrastructure for basically AI systems as well as other applications to basically engage with on-chain activity.
I want to get your take on the Clarity Act. I'm asking a Clarity Act question almost every day on the show, and rightfully so. I know it's a big one for the industry. What are you tracking on the development of that bill out of Capitol Hill? And what does it mean for a potential stablecoin surge still to come?
So with greater clarity in general from a regulatory perspective, it allows for institutions to lean in. So we've got clarity from an actual regulatory perspective in a number of key jurisdictions, not just the US, and it does act as a catalyst for a wide range of adoption and for institutions just simply to be able to engage.
Why do you have a hard supply cap at Aptos? First and foremost, I should ask, what does that actually mean for someone watching who's unfamiliar, and why is that the path forward?
So the Aptos Foundation's been extremely busy. We actually did a holistic review of our tokenomics, and so what it means from a supply cap perspective is we actually capped the supply of APTR token at 2.1 billion. We did a number of other changes related to gas fees, basically programmatic buybacks, and it's all to basically facilitate a deflationary dynamic with the APT.
Finally, your partnership with OKX, you've launched App Open Standard for AI Commerce. How did that relationship come about, and what should people know about the most important details? I'm sure you're pretty bullish on it. You got to be.
Absolutely. OKX is a longtime partner of Aptos, and so we're extremely excited about basically agentic payments protocol. So essentially it's allowing for AI agents to engage in a much more efficient manner on chain, and that works to the strong characteristics of Aptos in terms of being a low-cost, fast blockchain.
Solomon Tesfaye, Chief Business Officer at Aptos Labs right here in New York City. Thanks for being here. Come back on the show anytime. Really nice to see you.
My pleasure. My pleasure.
A lot more taking stock coming up right after this. The crowd goes wild. Welcome back to the show. Henry Delahaye joins us now down here live on the trading floor of the big board. He is the co-founder and CEO of Raise Summit. My man, congratulations and thanks for being on the broadcast today.
JD, thanks for having me. Super excited to be here as a French kid. So pretty emotional to be here today, and thanks again for the whole New York Stock Exchange ICE group to have us today.
Of course. What was the experience like for you to be with us down here and ring the closing bell on a day that brought some all-time highs for the stock market? I think you're good luck.
I mean, we're in the AI market, so we have been here for 2 years and a half. The market has been pretty green, but I don't want to be sounding too optimistic. So we never time the markets.
Sure.
We're just like building on a daily basis with the team, and again, big kudos to them. It's it's the outcome of like 2 years and a half, a team of 60 people working. Wow. So I mean, like the world is still very large, very big ambitions, but at the moment we're the platform in the EMEA, looking to expand in the US and
Amazing.
soon in the Middle East. So yeah.
So talk to me first and foremost about the event. It's going on in July. I'm looking over your shoulders here at the Cubes. Early July in Paris. Talk to me first and foremost the type of tech leaders that naturally gravitate to this incredible event.
Yeah, so basically when we launched Race 2 years and a half ago, the idea was to kind of build the antithesis of many large tech trade shows that exist, where they're only kind of fighting for the highest number of attendees, but that comes with a lot of dilution, right? And so when we crafted Race, we built it on 3 foundations. The first one being global from day one, so it's not a Franco-French or Franco-European gathering. 2 being uncompromising, 1 in content curation, so really getting the best leaders, CEOs, entrepreneurs on stage, and really bringing the French experience. So what do I mean by that? It's being, obsessed with like premium luxury. So the main event is at the Château de Versailles and at the Louvre, which I think is kind of unique in the world of events. And lastly, what is super important to all our partners and sponsors to be obsessed with tangible ROI. So delivering, executing for our partners that trust us to bring that tangible ROI for their growth and for the AI market to go further.
I always thought the New York Stock Exchange hosts pretty remarkable events, but it's tough to compete with the Louvre. That's an incredible opportunity and a backdrop for your event. Some of the top emerging technologies or the trends that you have seen at this event over the last few years, or your expectations for the 2026 edition?
So I think what is kind of also differentiating is that because we're based in Paris, in Europe, we have a very agnostic platform, bridging obviously our US friends that are mostly our partners and sponsors, but also the rest of Europe, Middle East, and Asia. And so what we see this year, especially in Europe, is the sovereign AI thematic that is very important, especially from infra to the application level. I'm sure you've heard of like Lovable, Eleven Labs, Mistral, all the European companies that are, being in the battle with our US friends and counterparts.
Where would you say we are with regards to artificial intelligence development? The United States versus the EU. Where are we in terms of, I don't want to say it's a competition, does it lift all boats at the same time?
So obviously I think there's like not a proper, there is an obvious answer. The US are far, far, far ahead. It would be lying to say the contrary. But I don't think it's a race. It's a more matter of, if you're like, let's say in US shoes, you're going to say it's a fight against China and the Western world against another bloc. I think Europeans, we have this kind of luxury of, being the outsider. And so when you're an outsider, you have some good options and good way to position yourself. But again, Raise is apolitical. Our job is to deliver and execute a great platform for everyone to do business, because behind the curtains, everyone works together. Obviously, there is some macro and geopolitical variables components that you need to internalize, but that's not our job at Race. Our job is to bring everyone together and make business, right?
Despite the backdrop, I love that. Before we let you go, what are you personally most excited about as you think forward to this year's event?
That's the $10 billion question.
That's a tough one.
I think, bringing ROI to our partners, and like the VIP dinner that is going to be in Versailles, it's one of the first time it's going to be completely iconic. And again, as we do really well in France, it's to deliver that experience that is kind of unique, iconic, and super exciting for this.
Unfortunately, I won't get to go personally, but I know we'll have colleagues there. We'll be watching from afar. Every panel, every event, every bit of news that comes out. Henry Delahaye, co-founder and CEO of Raise Summit. Thanks for being here. Congratulations.
Thanks, JD. Thanks for the interview.
A lot more taking stock coming up right after this.
Hey, guys.
Nicely done. Nicely done, dude. Watch yourself here, Jeff. Yep. All right, time for the latest headlines in the world of fintech, crypto, and artificial intelligence for your Friday Eve. At this hour, Bitcoin up a full percent, back to about 76,000 and change. ETH and Solana both up at this hour, 0.6%. Next up, Anthropic weighing a new funding round that could value the company above $900 billion. It's a move that would put it ahead of OpenAI and signal intense investor demand ahead of a potential IPO. And finally, at this hour, SoftBank set to plan to take Rose, it's a new AI and robotics company, public as soon as this year, betting on autonomous systems as the next frontier in the global AI arms race. I didn't walk into anything. So far, so good. And now, Money 2020's very own Scarlett Sieber is back to explain the ways fintech companies actually make money. Take a look.
I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money. If you've ever traded a stock inside a sleek app and thought, wow, this feels easy, there's a good chance Alpaca was doing the hard part behind the scenes. Meet Alpaca. Alpaca provides brokerage as a service, APIs that let fintechs embed trading without becoming licensed brokers themselves. So how does Alpaca actually make money? First, trading fees on executed volume. Second, brokerage margin and market access economics. Third, interest income on client cash balances. And fourth, platform fees for global brokerage infrastructure. The real value is what Alpaca removes, though. Licensing delays, compliance complexity, enormous fixed costs. So let's do a momentum check here for a second. Alpaca's Series D in January 26 highlighted just how valuable embedded investing infrastructure has actually become. So what's the moat that Alpaca has? Licenses, scale, and regulatory reach, none of which are quick to replicate. And that is how Alpaca actually makes money, by letting everyone else look innovative while it does the regulated, unglamorous work that powers most of investing. Fintech blow-ups need serious plumbing underneath. Hopefully you know that. So with that, are there companies that you want us to feature? Go ahead and drop them in the comments below, and they might just make the cut. In the meantime, back over to you.
Delicious. Tomorrow on Wall Street, the latest quarterly results in the morning before opening bell from Chevron, ExxonMobil, Defensive, Colgate-Palmolive, as well as healthcare giant Moderna. Your final tail of the tape on this history-setting day down here on the trading floor of the big board. The S&P 500 in positive territory, 1.02% for another round of all-time highs. Not to be outdone, how about the small caps also finishing the day in record-setting territory, up 2.2%, and the Dow 30 up 1.6%. That's going to do it for today's edition of Taking Stock. Thank you for watching. Have a great Thursday night. We'll see you again tomorrow. Woo!